Fair enough. Shall we see what Smart Money's been up to?
Yeah, we've been talking about what we're buying and selling as though anyone cares about that. But we had a chance to look at some proper people and what they do, because it was 13F deadline earlier this week. I had a look at two. The two I always look at, which is Berkshire Hathaway, partly because I own quite a bit of that stock, at least quite a bit by my standards anyway. And Scion Asset Management, because I think it's fun. And these are two 13Fs that think about stocks in very different ways. So Warren Buffett, investor, business owner, thinks that the way you should think about your return is not based on what you can sell the stock for, but what the business will produce. Michael Burry, absolutely the opposite of that. Intends to buy things and then sell them again, and then buy some more things and then sell some other things, or maybe sell them first and then buy them back again later by going short stuff. He's absolutely a trader here, and he might well be informed by what earnings are going to do and so on, but he's basically a buy it, sell it kind of a guy. So I'll run through these very quickly. Buffett was buying Ally Financial, Occidental Petroleum, Celanese, whatever that is, Paramount, Markel, McKesson, Activision Blizzard, Chevron and Apple. Sold some stuff in US Bancorp, Kroger, General Motors, Store Capital, completely out of Royalty Pharma, completely out of Verizon. Back to those two in a moment. Burry sold everything that he was holding in the US part of his portfolio, which was Bristol Myers Squibb, Bookings Holdings, Warner Brothers, Alphabet, Cigna, Meta Platforms, Ovinativ, Nexstar, Stellantis Global Payments and Sportsman's Warehouse, and bought himself another stake in Geo Group, which is Prison former REIT. What should we make of these things? Well, I think I feel slightly vindicated by these. Only slightly, I'll come back to why slightly, but both of these look like they're expressing pessimism to me. So Michael Burry obviously seems to be expressing pessimism there. He seems to think stock price is going to go down, so he doesn't want to own many of them. And maybe something like a really badly beaten down real estate thing, which is probably going to enjoy steady demand, at least for the short term in Geo Group, is going to be okay, but the rest of it will run out the way of all that stuff. Buffett doesn't make predictions about where stock markets or stock prices are going to be. It's not really his kind of game here, but he is moving very slowly into stocks. He had about 70 billion available, and you wouldn't expect him to have used all of that, but he's deployed about, in net terms, 4 billion, and I think one more in buybacks for Berkshire last quarter. That's slowing down quite a bit from Q1, when there was a lot going on in terms of acquiring Allegheny and various other stock investments as well. So that makes me think that I'm not the only one here struggling to see the stock market as a howling bargain here, with both of these two thinking, I guess the lazy way to put it is it's looking a bit toppy. I mean, Buffett saying, look, stuff is trading at prices that are too high. Burry saying it's probably coming down, or at least I think it might be coming down. So I feel kind of slightly vindicated here. Steve?
Burry's 13F is interesting, because it's almost like he's having a bit of a laugh, isn't it? He sold everything off. He's bought a really tiny amount of Geo Group, and it's kind of like he's saying, like, my portfolio is in prison until the market comes down. That's literally what he's saying. I think that's his little joke to the market here. I don't know. I mean, he's on Twitter, isn't he?
Well, he's probably not at the moment. I mean, he's only on Twitter when he wants to tweet anything, and then he goes back off it again.
Yeah, well, he's making all sorts of doom and gloom calls, and I mean, the things he's saying, they look like they have merit, but I mean, I'm just not of the mind to judge them. I think when they happen, or if they happen, it'll be one of those things where we'll be like, oh yeah, that was obvious. But at the moment, I just don't see where this huge fall that he talks about is going to come from. I can see these earnings slippages coming. I think we could all probably say that we're expecting some earnings growth slowing or earnings slippages. I think, but the sort of falls that Burry's talking about are massive. Buffett, on the other hand, is just buying really safe companies. Celanese was the one I meant to look at before I came on. I just had a quick search. They look like they're in polymer solutions, so they're a chemicals company. They're taking the oil and making some kind of plastic solutions off the back of it. So that kind of ties in nicely with his general bullishness on oil. I mean, he's on his way to buying Occidental. I think he's not a million miles away from probably making a bid for that, I wouldn't imagine. Then Chevron, Activision is his arbitrage play, which you and I, Steve, have had a good old chat about potentially joining him on. Ally Financial's a bit of a weird one. I don't really see the interest in that company. And then there's a few sells across the board, and General Motors and Kroger and Store Capital are the ones I saw. I think Verizon as well was that the last of his Verizon stake, or is there a bit more?
That was the last of his Verizon stake. He was quietly building that up without telling anybody about it, and then suddenly started unwinding it all again, fairly swiftly, actually. I mean, here's why I only feel slightly vindicated by this. I looked down the stuff that he's selling, so US Bank, Kroger, Store Capital, Royalty Pharma, Verizon, and as far as I can see, it's dividend stock, dividend stock, dividend stock, dividend stock, dividend stock, basically.
Yeah.
And this is slightly backward looking in the sense this is Q2 activity, right? Not Q now activity. So it's at least 6 weeks out of date. But I mean, Buffett doesn't move fast on these things particularly. My suspicion there is, I sort of feel like he's moving the opposite direction to me a little bit there. I mean, Royalty Pharma was never something he had a massive insight into. I think Charlie Munger sort of gave the game away a bit on pharma companies and said, look, sometimes it's an idea to just buy a load of them if interest rates are really low and you've got money sitting around in cash and they're trading at low PEs, which they often do, and just have them kind of tick over for dividend stuff rather than leaving the money in cash losing by more to inflation, I guess. So I feel only kind of slightly vindicated. You're right about that Chevron thing. That's become his fourth largest holding now. That's taken it past American Express, which is kind of... When I think of the Berkshire portfolio, I think of it as kind of very, very top heavy, down to about 5 stocks. And if you ask me what I think the kind of heavy things are, I'd say Apple, say Bank of America, say American Express, Coke and Kraft Heinz. They're probably the things that I think, once you get outside of that, nothing's having a really meaningful impact on this portfolio anywhere. But Chevron's come poking in there. It's now bigger than American Express, so I guess I have to take that seriously. And Occidental's become bigger than Kraft Heinz, so I have to take that fairly seriously as well. So lots going towards oil in that, for what it's worth, which isn't something I profess to know a tremendous amount about. I'm prepared to think that this is my interest in whale watching, right? I guess learning what people who know more about these things than me are doing.
Yeah, I guess. You've no need to have an oil exposure when Buffett's going to look after that for you, isn't it? I guess you could use his
tech exposure.
Yeah, use his knowledge of having a rather large utility to let you know when a good time to buy or not buy oil is, and not have to focus on that yourself. Interesting that he's still going heavy on Activision Blizzard, though. That's an interesting move for me. I think we're of the same opinion that we think this deal's probably going to go through, perhaps with some caveat that, perhaps Microsoft has to, or the new Activision will have to continue making games for other consoles, I think is the most likely way that goes through, which kind of ruins the point of purchasing it, if you ask me. But I think the benefits of having Microsoft run a company that's had quite poor track record of looking after its staff will probably weigh heavier than the negatives of having, trying to create a mini monopoly on what are essentially crap games. What do you think?
I think I agree with all of that. And in fairness, Paul was ahead of both of us on this particular ARB thing. He owned it and then he stopped owning it, I think. But I seem to remember we talked about this on a podcast a while ago, and I seem to remember telling him I thought this was quite a good idea that he had. I thought he had a fairly well protected downside, because worst case scenario is you've overpaid for a stock. And it's not like a random biotech that might produce nothing ever. Activision Blizzard is going to do stuff. You might find you get a bit of a drag. Share price will go down, but look, the business will be probably fine going forward. Best case scenario, well, you get $95 a share for something you paid, I think it's about 80 at the moment for it. It would have been less than that when he bought it. So I quite like this as an idea. The point about Activision then having to make stuff for other consoles, I see that that's an issue. I think that's, assuming that the deal goes ahead with that caveat, that strikes me as a Microsoft issue, not an Activision issue, for what it's worth. I mean, it becomes an Activision issue, or an issue for the Activision shareholder, I guess, the Buffett or Paul Briscoe, and I've never mentioned those two names adjacently before. But it becomes an issue for them if it means the deal doesn't go through, or has to go through at a lower price, or something like that, I guess. I mean, their ambition is just to kind of get rid of this thing again, as far as I can tell, collect $95 a share for doing so, and then work out what to do with that afterwards.
Yeah. Yeah, I agree completely. And the other one that really sort of stands out, I guess, is the McKesson Corp, because McKesson Corp, if I'm correct, is a healthcare company.
It is.
He's just recently moved out of all of his healthcare companies. He's taken $1 billion stake in McKesson. Do you know anything about them?
No, Sven has a video on them from a while ago that he quite likes about them. All I knew was that they were a healthcare company. I should really know more about these things, but I haven't got around to looking at that yet.
I was getting them mixed up because I was getting them mixed up with McCormick, which is the spices company. So I thought I knew something about them, but I thought I'd better just check my knowledge before I go, why is Buffett buying a spice company? It turns out he's not. So yeah, I just think, I mean, Buffett's portfolio is always an interesting portfolio. It's kind of like, last year or the year before, we'd have been calling it a boomer portfolio, I guess. But that's essentially what it is, isn't it? And it's a portfolio heavy on companies that produce a hell of a lot of cash.
Yeah, it's the way Berkshire's kind of made its money. I mean, he wasn't always I guess you kind of don't. I'm not sure you avoid being a boomer ever because it's to do with when you were born, right? But I think he's probably older than being a boomer. So yeah. I guess he was never a boomer, but he's always owned those kind of stocks, right? The kind of Berkshire story is you kind of compound slightly faster than everybody else, and over time that puts you absolutely miles ahead in a certain kind of way, and you just keep doing that bit by bit by bit, and eventually your streak